You're welcome to the Market Review, where we bring you key developments in the financial and capital market as they affect the economy. Today, we'll be discussing the Russia-Ukraine conflict and the implications on the Nigerian commodities market. My guest today is Mr. Yusuf Ogunbiyi. He is the head of Structuring and Origination, AFEX Commodities Exchange. Good morning and nice to have you on the program.
Good morning. Nice to be here with you as well to discuss this issue.
Yes, thank you very, very much. And before we begin this conversation, let's give you a wrap-up of key activities that occurred last week in the capital market. First, the Nigeria Exchange, in partnership with the Nigeria Economic Summit Group, organized a conversation on the 2021 Finance Act. The CEO of the Nigeria Exchange Limited, Mr. Temi Popola, described the Finance Act as timely and apt, as it will help continue to support developments in the capital market. He also made a strong case for more enabling environment for institutional investors to continue to invest in the market. Also last week, the AFEX Commodities Exchange signed a memorandum of understanding with the Chartered Institute of Stockbrokers. This is aimed at building capacity and improving the activities in the commodities exchange ecosystem. We go on a break, and when we return, we'll continue this conversation.
Tune in to Web TV Daily to stay up to date and informed on the financial market, personal finance, and more. We have got you covered with all your favorite TV shows, economy and politics, market review, women's series, millennial talk, Islamic Finance Weekly, The Brief, exclusive interviews, events, and we keep you up to date on all the updates in the financial market with the market opening gong. Watch premium content. Watch Web TV. Same news, different perspective.
Welcome back. If you're joining us, it's the Market Review, and today we are discussing the Russia-Ukraine conflict and the implications on the Nigerian commodities market. My guest is Mr. Yusuf Ogunbiyi, head of Structuring and Origination in AFEX Commodities Exchange. Let's first begin with what has been the impact of the whole conflict we're seeing between Russia and Ukraine on the Nigerian commodities market.
Thank you very much for that question. I think the issue between the crisis between Russia and Ukraine has been discussed across multiple fora on a number of occasions. But I think it's important we continue to reiterate the challenges we might be facing so we can prompt all stakeholders to put their hands on deck so we can solve some of these problems that are imminent. So when looking at the impact of the Russia-Ukraine crisis on the commodities market in Nigeria, you look at it from a few perspectives. So the most important commodity that would directly be affected is wheat, because these two countries and the entire Black Sea region, which they both cover, provides about 30%, 29% exactly of the total wheat exported, traded globally. And that means that when you have given the sanctions we've seen on Russia, and some of the challenges, logistics challenges of moving commodities out of Ukraine as well, you can then see the impact of having 29% off the market directly. So wheat will be the first problem we might be faced with. And by extension, Nigeria produces about just 2 to 3% of what it consumes in wheat. So that might be a strong challenge for us. The other commodities, we might be looking at fertilizer as well, because fertilizer, that region is also important for fertilizer production. And if that region is affected, we might be looking at fertilizer exports being limited globally. And because fertilizer is critical to agricultural production, you can then see where this ripple effect will be coming in. Thirdly, even though it's indirectly, is palm oil. So Ukraine is the largest producer of sunflower oil, which is an alternative to palm oil. And in this instance, where sunflower oil is not available globally, given the issues we have in this region, palm oil prices will continue to rally. and that would affect our processing companies in Nigeria directly, because they would then have to pay more for the palm oil they buy, both domestically and internationally. So these three commodities mostly will be the ones that will mostly be affected.
Wow, very interesting. Wheat and of course fertilizer inputs and of course palm oil indirectly because of Ukraine's role in producing sunflower. But let's look at the wheat again, because it has hit a 14-year high in terms of the impact of this conflict. The price has really surged, and that has implications, huge implications for Nigeria, like you rightly said. And I just want to speak about our local capacity to produce. What do you have to say about this? Do we have that capacity, considering this challenge of importation and the rising costs and its effect on the whole value chain of what wheat produces?
We have different impacts, different plays across different commodities that I've mentioned. So for wheat, we are still deficient in terms of production, like a very huge deficit in terms of wheat production in the country. And so last year, the federal government launched the Brown Revolution, similar to what they did for rice. So they are planning to, the Brown Revolution has kickstarted already. And the thinking is, how do we ramp up, act very, very aggressively, the production of wheat in Nigeria? Nigeria, the Sahel region in Nigeria, and by Sahel region, we mean the up north, northern part of Nigeria, is critical to this kind of achievement. So producing across Jigawa, Kano, Kebbi, and some other states in the country. So these are critical to producing wheat at the end of the day. We are just starting that process, so it might take a while for us to catch up in that regard. For fertilizer, Nigeria already produces a significant chunk of what it consumes, especially when it comes to urea, given the fact that urea is produced using natural gas. And Nigeria has abundant volumes of natural gas. So we've been able to leverage on our natural gas capacity to expand our urea production. What I might be concerned about is the potash that we really don't have in Nigeria. So that might be imported from other parts of the world to make up the entire volume of the fertilizer that is needed. For palm oil, Nigeria also produces a sizable number, even though we still have to import to meet up the demand that we have. But companies across Nigeria, the very large ones and some of them in the mid to small scale plantations, are already ramping up production as well. Over the last 2 years, we've seen significant rally in palm oil prices. So that has also already been a trend that we've seen. So palm oil production needs to also improve. But if you look at it from a holistic standpoint, it means that we are making headways in some value chains while others are just trying to catch up. So we might need to double down on our activities across all layers. So we need the financing we can get. We need all the hands on deck to commercial farmers to come on, and also doubling down on these smallholder farmers to get the volumes we need. I must mention that moving forward, one of the other issues that we see from this Russia-Ukraine crisis, aside the casualties and the fatalities that we might be seeing, is the fact that we might experience decoupling of global trade moving forward. Countries will now prioritize having domestic supply of these volumes to meet up with their own demand. If otherwise, you might be exposed to other situations where countries will just cut off their imports. They will not export anything to you, and you'll be forced to produce what you need to produce. So that's understanding that there might be a decoupling in global trade might also prompt us to act very fast to meet up with our own demand, which is growing by the day.
Okay, I mean, the coupling of global trade and, of course, like you said, the need for us to enhance the value chain, not just on few, but generally critical agro-products is very important at this time. But from the AFEX Commodities Exchange standpoint, how are you navigating this, helping again to support the agri-value chain and production in our country, considering the lessons from this conflict?
Yeah, for us, it's a long-term play. We've been in this market for over 6-7 years now. And the thinking is we've always mentioned and highlighted these challenges and trying to call attention of the right stakeholders to pay attention to them. So for us, it's a long-term play. So we have a number of options across the entire value chain, moving from the farmers to the traders to the processors. So for us, first thing we did last year was to partner with the federal government in the Brown Revolution, trying to also see how we can contribute our quota in ramping up wheat production in the country. So we have heavily invested in that, helping farmers get the right input, the right extension knowledge, the right storage facilities that they need to produce this wheat. And this we are doing across a whole lot of other value chains. So we are doing it across the rice value chain, across the maize value chain, sorghum, and ginger, cashew, cocoa, across all of these value chains that are critical to what we consume in the country. So we think of it from a holistic standpoint. So you provide the financing, that you help to provide the platform that creates financing for these farmers, the storage facilities leveraging on over 121 warehouses across the country. We also see opportunities for extension, leveraging on our own proprietary technology that we built in-house. So we leverage on all of this to see how we can provide solutions to these problems. So that's on the one hand. On the other hand, which is the processor leg, we also see how we can leverage on the products that developed by the exchange to help them get money to buy these commodities that they need. One problem that we've seen is identification of the commodities and using it as assets in financing. And over the past 2-3 years, we've been able to develop some products that are quite innovative, allowing processors to get access to capital market players and raise financing for their operations. So it's a holistic solution, heavily invested in the farmer end, where we provide input, extension services and storage, and also heavily invested in the processor end, where we help them to design instruments to raise capital from the market. So it's a very holistic view of looking at the problems that we are facing.
And finally, when you look at the federal government and strategy to improve the whole value chain, the agri policy, and as it keys into commodities market, what would you advise at this point, particularly this dependency on imports, huge wage bill, which is being addressed through local production? What generally would be your advice at this point?
Yeah, I think the first thing we need to recognize is the fact that the risks of decoupling, like I mentioned earlier, in global trade is rising significantly. So we need to double down on our efforts to reduce the deficits across a number of the value chains. Nigeria has huge volumes of arable land that we can deploy in producing these commodities. That's the first thing. Second thing is that we would like to see a higher efficiency in the deployment of intervention funds in the design and implementation of these programs. The government is doing significantly well in that regard, but then we would also like to see a bit more efficiency in the design and implementation of these programs. Lastly, we all know that agriculture is a long-term game. It's not a short-term 2-3 year solution. So we would also like to note that the solutions that we would be providing will span across multiple administrations. We've seen the agricultural transformation agenda. We've seen the blueprints implemented by this government as well. So if we can also continue to do that over the next couple of years, then we can also begin to see the massive results we want to see. Rice is painting a picture, looking at the implementation across the two administrations, the past two administrations, and we've seen progress in rice. We would also like to see the same across some other value chains in the country.
Thank you very much, Mr. Yusuf Ogunbiyi. It's been very nice having this interaction on how the Russia-Ukraine conflict is impacting Nigeria's commodities market, and important to learn some key takeaways on what we must do to really avert issues like scarcity and adverse impact on the populace. Thank you once again, Mr. Yusuf Ogunbiyi, the head of Structuring and Origination, AFEX Commodities Exchange, for this conversation. Thank you once again.
Thank you very much for having me.
And that'll be all for this edition of the Market Review. If you would like to send questions or make your suggestions or comments around the Russia-Ukraine conflict and the impact on the Nigerian commodities market, you can send those views, comments, and questions to Ottoabasi.Abasiekong@proshareng.com. Also follow our social media platforms displayed on the screen. And you can also get all the latest stories around the commodities market on our website, www.proshareng.com. Thank you for being part of this show. Just wishing you a great day.